In the metals quadrant, taking a look at the December gold futures contract, which gapped higher to a new all-time high today, finishing the week up over 3.4%. This ends gold's 3-week corrective losing streak in robust fashion, honestly. Not only was gold up 3.4%, but this week's volume was the highest since the last up week on August 12th, or I should say the week of August 12th, and on top of that, with good volume, as I mentioned. The low today was a gap higher by 17 basis points, 0.17% to 25.85, and the high today, 26.14.60, still holding with a little bit of time left in the session, was up 1.33%, and as I mentioned, with just a little bit of time left in the session, we're still up about 1.15%. Central banks are part of the reason as the probability of a 50 basis point rate cut by the Fed jumped to 43% today. Yesterday, it was 30%. This is following an ECB rate cut this week where the head of the European Central Bank, Christine Lagarde, pushed back on a guaranteed October rate cut that the media was asking about and the markets were fully expecting. Conversely, 250 basis points of rate cuts are now priced into the market in the US by September of 2025, including 250 basis point rate cuts still being priced in as the highest probability somewhere within this rate cut cycle. That essentially weakens the dollar, and that also strengthens gold. But also inflation expectations surprised a little bit in the data set today. University of Michigan one-year inflation expectations dropped, but five-year inflation expectations went up. 1 year fell from 2.7% from 2.8%, but the five-year inflation expectation jumped to 3.1% from 3%. All of this a tailwind pushing gold to new all-time highs this week.